Imagine you are standing at a busy crossroads. You see many signs ahead, some pointing to safe roads and others leading to risky paths. In the world of stock trading, options are like those signs. They can guide you to profitable roads, but only if you understand them. So, what exactly are call and put options? And how can they help you make money in stock market? Well, let's take a walk through the basics of option trading. Don't worry, I'll keep it simple. 1. What is an option? An option is a financial contract between two parties. One party gives the other the right but not the obligation to buy or sell a stock at a set price within a specific time frame. Think of it like reserving a movie ticket. You pay for the ticket now, but you have the option to use it later. Whether you go or not is entirely up to you. Options come in two types, call options and put options. Let's break them down. 2. What is call option? Let's start with the call option. Imagine you believe a particular stock will rise in the future, so you decide to buy a call option. This gives you the right to buy that stock at a specific price, known as the strike price, before the option expires. For example, let's say you think company X stock, which is currently priced at $50, will go up to $70 in the next 2 months. You buy a call option with a strike price of $55, paying a small premium for that option. Now, if the stock price goes above $55, let's say to $70, you can buy it for $55 even though it's currently worth more in the market. You can sell it right away at the higher price, making a profit. Is it right? But remember, if the stock price stays below $55, you won't exercise your options. You will simply let it expire, losing only the premium you paid for the option. That's the risk. 3. What is a put option? Now let's talk about the opposite, a put option. A put option gives you the right to sell a stock at a specific strike price before it expires. This is useful when you think the stock price will fall. For instance, let's say company Y stock is currently at $50, but you think it's going to drop to $30. You buy a put option with a strike price of $45. Now, if the stock falls below $45, you can sell it for $45 even if it's worth less in the market. Let's say the stock falls to $35, you can still sell at $45, making a profit of $10 per share. However, if the stock price stays above $45, like at $50, you won't sell your stock at a loss. You will let the option expire, again losing only the premium you paid for it. Just like with call options, the risk here is limited to the premium you pay for the put options. 5. How to trade options. A simple example. Alright, now let's make it even simpler. Imagine this scenario. You are looking at the stock of a company called Greentel. It's currently trading at $100 and you think the price will rise. You decide to buy a call option with strike price of $110, expiring in 1 month. Let's say you pay a premium of $5 for each option. So your total cost is $500 since each option represents 100 shares. Now, if Greenstack's stock goes up to $130 in a few weeks, you can exercise your call options. You buy the stock at $110 and sell it at $130, making a profit of $20 per share. After subtracting the $5 premium you pay, your net profit is $15 per share or $1,500 in total. That's how options can help you make money by predicting stock price movements. But remember, if the stock doesn't go above $110, you lose your $500 premium. And that's the risk you take when trading options. 5. Risks and rewards of option trading. Now, before you dive in, let's talk about the risks. As you have seen, options are powerful tools, but they come with risk. If you are wrong about the stock price direction, you will lose the premium you paid for the option. But here is the beauty of options, the potential for high returns with a limited downside. You are not buying the stock outright, so you don't need a lot of capital upfront. Just remember, options are time sensitive. Once that expiration date comes, the options expires and becomes worthless if you haven't exercised it. So whether you are interested in making money from rising stock or protecting your portfolio from a falling market, call and put options can be powerful tools in your trading arsenal. Just be sure to start small, practice, and learn as you go. Options trading might seem complicated at first, but once you understand the basics, you can start making smarter decisions. Thanks for tuning in today. If you enjoyed this video, don't forget to like, share, and subscribe for more easy to understand financial tips.